I just would argue that the fixed income market have been dominated by sovereign issuances, where we would like to see more corporate bonds and maybe in particular convertible bonds, which offers a lower coupon rate. But there has to be an investor education. Corporate treasurers would always focus on different areas than capital markets. Capital markets has been always treated as an only equities market, where there are alternative solutions outside of the main equities market for investors. And I would argue also the supply side is not there. There is an interest from global investors to invest in emerging markets. However, the supply side is still underdeveloped. It seems our discussion have been over financing the infrastructure. While it's important element, I think there is another sector of the economy, the private sector, especially in the SME segment, where we lack the funding opportunities.
I'm afraid it's the same the world over, but yes.
And so government also need to look at the solution and integration between different government entities and join in with the private firms and the private sectors to build solutions for companies to grow. In the growth finance sector, companies have been always limited to either banking solutions through bank lending or private placement and so on. And the cost of IPO have gone significantly increased the past decade, especially the cost of underwriting. And it drove many of the boards, while they said they wouldn't even discuss listing in an exchange as a method of accessing funds or financing their projects, but rather as an exit strategy. So we derived away from the main objective of capital market. We know capital market from academic perspective, where banks have borrowers on one side, lenders on the other side. Capital market have issuers of securities on one side, investors on the other side. So from capital market perspective, we have to have the solution, which we believe we do in Bahrain Bourse, to first lower the cost of IPO and listing, and lessen or reduce the burden and bureaucracy and process it takes to list. We are launching Bahrain Investment Market at the end of this quarter, and we are introducing also direct public offering. So in an IPO environment, you get all these advisors and underwriters that would drive the cost up. But with direct public offering is a form of crowdfunding where it is regulated enough to protect investors, and at the same time gives opportunity for companies to grow. I fully agree on the infrastructure, but infrastructure comes at cost. If the infrastructure is built where there are no companies and institution that uses this infrastructure, just keeping up the same level would cost the government even more. And it will be a downward spiral for government to focus only on infrastructure and not on the private sector and developing the private sector. We've seen Numu, that's a new market launched by Tadawul yesterday. And the success of Numu would definitely trickle down to Bahrain Investment Market and other markets in GCC that will be open to companies looking to grow. I think we need to stress that or I need to stress personally, the development has to be organically driven from the GCC and focus on SME and individuals. And I can, a simple story would be the introduction of fixed income market in Bahrain back in 2015. We were expecting institutional investors to buy in the primary market fixed income instrument. And we were surprised. We learned a lot, and it was an eye-opener that most of the subscribers of the issuance were actually retail and SME companies, not the expected segment. And that would definitely we go on the point where there is a paradigm shift, and there is also a paradigm shift in financial literacy. 10, 15 years ago, I don't think the options were there, but right now, while the fixed income market is developing, you would see even interest from the buy side, from the retail investor, to jump in the fixed income market. It's a tough balance between focusing on the macroeconomic level and the microeconomic level, and you would need to have the drivers ready to facilitate it. But I also think we are underselling the structures now. The regulations are improving day by day. Comparing it to the last decade, we've seen the developments month by month, and I would go back to my first point: investor education, and investor education. This is where I think we need to focus on. The regulation have been developed, and I would argue we have a competitive advantage in GCC against any elsewhere, especially with the capital within GCC.
Because of the local liquidity?
Because of the local liquidity and the regulation that allows foreign investment that weren't allowed before. Maybe in Saudi case, we have 100% foreign ownership in our case. But again, the main element is SMEs and individual investor from one side, and from the issuer side, SMEs and the companies in the growth finance sector.
It's good to hear that you're optimistic about it. The region is still...
I'm confident about it.
You're confident. The region is still quite fragmented, though, at a state level. Do you think, though, that there is appetite for some sort of GCC capital markets union? It was suggested in Europe. It was a very good idea, in my opinion. It hasn't moved forward, partly because Europe's had other problems to deal with.
But you don't need that anymore. I mean, with the fintech, I mean, Mr. Khadr Mahi mentioned fintech before. 10, 15 years ago, you would need one single database. The accessibility of this database would be costly, and the technical infrastructure were limited. Right now, we understand the front end of our market would be the brokers and capital firms. So the need or the development would have to be on the front end systems. So you allow brokers to access any capital market from wherever they are. You could develop a cloud-based platforms that would give them lessen the cost of connecting to the systems, and essentially once you log into their platform, you would access all the markets from where you're sitting. So the need of integrating markets in terms of one single market is not necessarily true anymore. Okay. But the need of integrating or developing the framework, the legal framework that would allow brokers and buy side to access capital directly, a form of direct market access, is the solution. If we don't leave it to the market to decide whether it's risky to join in and not. The cost of funding from banks for SMEs have gone up, which is true to your statistics that you mentioned. And they don't have any second chances as an entrepreneur, or third chances. So it's either hit or miss for them right now. But with allowing them to access capital through the capital market, they would need to, especially with no underwriter or limited underwriter framework, they would need to convince and have the right prospectus to attract investors. Otherwise, no investor would be interested. I agree to an extent in terms of investor education, with the fact many of it's not the case in Bahrain, or it's heavily dominated by institutional investors, but in other jurisdictions, the speculators and daily traders would ruin SME market if they would jump in and try to drive the price up where there is no valid reason. The financial doesn't support it. But in cases where what Numud did was a perfect example, to allow only investors that meet certain conditions to invest in the market, to make sure the market doesn't fluctuate in a way that doesn't reflect the financial position of each company. I still believe you leave it to the market to decide, even if the entrepreneurs lose in capital market the first time or fail, the investors with him are taking the risk as well, whether it's negative or positive. The need for investor education on issuer side, it's definitely an important task that needs to be done, not only from Bahrain Bourse, but on broader institutions to be involved in investor education. Issuers, once you discuss financial gearing with them, especially the mind block that they have is something is challenging and would need to be focused on. But the regulation is there. So the regulation, the framework, the platforms are already there. And this is where we might see, you mentioned underdeveloped, but underdeveloped is a broader term where there won't be platforms or regulation, but there are. It's underdeveloped from the other stakeholders or interest groups within the capital market or the financial industry as a whole, and underdeveloped from the issuer side, not necessarily the platform. And I would definitely see the investment or buyer side is there, ready to engage, whether from global level or regional level, and also retail investors. But the supply side and the sell side would need to be educated in the alternative investment opportunities in capital markets. So equities is not the only solution. There are convertible bonds, there are fixed income instruments, and having the government, we know government in Bahrain has established itself with the fixed income market for a long time, a well-structured market, but other governments joining in would create the trust for issuers to join in and issue their own corporate bonds and convertible bonds as well.
Okay.
I would rather focus on the rating. We mentioned rating before, and there are ratings of listed companies that has been consistent with having good ratings throughout the years. And this is the reason why I kept being consistent in our message. Corporate bonds and convertible bonds is one key factor in bringing opportunities or financing opportunities to GCC, and focusing on the private sector to join in hand in hand. We've seen the Vision 230 in Saudi, and we've seen the Vision elsewhere, and all of them have one consistent message: to join in with the private sector in developing the economy, and the financing challenges are opportunities for them. Yeah. Okay.